can China take the stock market down? Or some interesting news overnight from China. And this is a crazy one. Going back to my days of trading at the Chicago Board of Trade, I was trading overnight, Asian and European session. And every once in a while, you would get a number out of China or Japan during that Asian session that has not been relevant or has not really moved markets for months. And boom, you see this huge move seemingly out of nowhere. And it would inevitably was the Chinese trade balance or the Bank of Japan coming out of nowhere and doing something completely unexpected. Most recently, Chinese trade balance comes in showing way worse data out of China than was expected, leading to some even greater Chinese underperformance. You can look at FXI, which is a pretty high volume Chinese stock ETF. And you see the last print here going from around unchanged on the year to down a few percentage points on the year in the same time frame that the S&P 500 is up over 15%, diverging in the first half or so of 2023 by 20%. To equity markets. These are stocks, tend to be highly correlated, but if your stocks in China versus stocks in the US, not doing so hot, and they came out the gate pretty well here in 2023, you can see that outperformance in Chinese stocks in the first month of the year. Since then, it has been just steady chugging along higher for US stocks, and continued fear of this Chinese economy just not being able to fully recover from the pandemic. Every month or two of bullishness, feeling like China might be putting those pandemic setbacks in the rearview mirror, something like this trade balance comes out and renews fears that this Chinese economy just has not been able to get kickstarted. Just a little bit of background of FXI's holdings. It is a pretty top-heavy market, the Chinese stock market is. Almost 30% in, you've probably heard of Alibaba and Tencent. I haven't heard of the middle one. I'm not going to butcher that name necessarily. And then further down the list, you've likely heard of JD.com and Baidu as well, maybe NetEase. Some of these stocks are pretty highly traded in the U.S. in terms of volume. You can access, an Alibaba and everything else. But these are Chinese stocks, not in the U.S. stock market. And so Alibaba, 10% of FXI, and if it's up or down, a couple percentage points in a given day, not affecting the S&P 500. And that's why you're getting some of this, divergence between these two different stock markets. Though they're likely pretty aligned in terms of sectors, obviously Alibaba is a tech company similar to an Amazon. They aren't the same companies. There's no crossover between the S&P and FXI, given that the S&P is U.S.-based stocks and FXI obviously is Chinese stocks. And you compare the top stocks in either of these ETFs, the top holdings of these indices, and Apple, S&P's top stock, even the recent fall of, double-digit percentage points for Apple coming off of earnings and the fallout after earnings, still up more than 40% year to date. Alibaba around unchanged, and then Tencent, which is 9% of FXI, down more than 20%. And you might think to yourself, why is this so crazy, Frank? Like Chinese stocks, US stocks, they can obviously be very different. Well, when you talk about long-term correlations, and especially in times of fear, like we've maybe seen around the pandemic or here and there since the pandemic, given the inflation fear that has been seen globally the last year or so, correlations between stocks of any color, be it, this sector versus that sector, this region of the world versus that region of the world, the correlations can really go to one, be very high during those fearful times, as we've seen sporadically over the last couple of years. And to see movement in opposite directions here from U.S. stocks relative to Chinese stocks is definitely worth noting. And you bring in the data going back to 2020, and this is right now the greatest divergence that we've seen. Yes, Chinese stocks have been lower in the later part of 2022 when we were really seeing that inflation fear and the U.S. dollar really rising to heights that we hadn't seen in years and years and years. Chinese stocks were trading lower at that point, but the divergence between the two, with the S&P 500 since the start of 2020 being up around 40%, and in the same time frame, Chinese stocks being down almost 40%, a divergence of essentially 75 percentage points there, really pretty historic. And we'll bring in some more historic data in just a second. But obviously no coincidence that correlations right now between these two different stock markets have been some of the lowest correlations that we've seen in the last decade plus. You go back to the early 2010s and you're seeing a lot of correlation prints between 0.5 and 1. I mean, you're even seeing some stretches there around 2012 where the correlations are really close to 1. And then you see a dip in 2015. You'll remember there was a Chinese stock scare, and that bled over to the US, but correlations broke down a little bit, but jumped right back up to north of 0.5 in the 2016, 2017 range, well above 0.75. Now, you look at the last couple of years since 2020, and we've seen some 0.5 prints, but that's been the high for correlation. A lot of prints under 0.5, especially at the end of 2021, start of 2022. Correlations really getting historically low here, as Chinese and U.S. stocks are less dependent than they were historically. And you look at the longer term chart of these two markets' performance, and China has been able to see some of the upside that the U.S. has seen in tandem there in spurts, right? 2010 to 2012, both performing around positive territory. In the 2015, 2016 range, both performing a little bit positive. And then you see the downsides kind of correlate, but just not as drastic in the U.S. as in China. China has actually been pretty siloed off, historically speaking, and has been really siloed off from the U.S. in the last couple of years. You've seen the correlations drop. You've seen since the pandemic there, and you see obviously both the blue line in the S&P 500 and the orange line in Chinese stock market. You see them both fall in the start of 2020, and you see them both bounce back. But the bounce back we've seen in U.S. stocks has been really incomparable to these Chinese stocks. And then also the fear that we've seen in the last year and a half, the U.S. stock market's been able to bounce back from that. Chinese stock market, not so much. As yes, the Chinese fear is bleeding over into the U.S. market, given the recent trade balance numbers that came out, and both markets operating in red territory in the last 24 hours or so. But historically speaking, at lows for correlation, S&P 500 has been able to put in some positive returns amid unchanged or negative returns in the Chinese counterpart here, and really seeming like a lot of these Chinese stories are pretty siloed off from the U.S. So can China take down the stock market in the U.S.? Of course, any news story can come out of anywhere. But if you're looking at the data, the recent correlations and everything else, more independent than they have been historically.